Hey, what's up, you guys? George here. And today I just wanted to go over what's going on in the stock market. Right now, there's a dip going on. It's not a correction. A correction is when the market decreases more than 10%. And it's definitely not a bear market, because a bear market happens when the market drops about 20% and lasts like a couple months. So we're not in either of those. We're just in a dip. It's a pullback, the analysts call it. The stock market is adjusting right now. And a lot of analysts are basically attributing this pullback with a lot of institutional investors that manage these billion-dollar accounts and billion-dollar portfolios, putting money into the bond market. As you can see in this graph that I'll show you, the 10-year yield for treasury bonds are about the same as the S&P 500 index funds dividend payout. So they're going to switch over from securities, which is the stock market, to bonds because they're just less risky. And so that's what's happening according to a lot of analysts. So I wouldn't be afraid. Don't freak out.
Oh my God! Okay, it's happening. Everybody stay calm. What's the procedure, everyone? What's the procedure? Stay calm.
These dips happen, corrections do happen. I've been doing this for over 15 years now, and I've seen the 2008 bear market. I've experienced the 2013 dip. I've experienced the 2018 correction, the 2020 correction, and now this dip. And there was another dip a few months ago. So there's nothing to worry about. So one thing that I always try to tell people is to invest in companies that you are comfortable with, companies that you've done your research on, companies that you know that will do well long term. And that way you mitigate your risk of losing money, because if you're not emotionally ready for this, you're going to sell. You're going to sell at the bottom. So don't sell, just ride it out. Things will go back up, especially with good companies. Now, if you're YOLOing on, meme stocks, and that's a different story. Now, I have nothing against with meme stocks. I've actually invested like less than 1% of my portfolio in meme stock and have done well in those. I'm not against trading either. I'm not against speculating. My Robinhood account, my entire Robinhood account, is a speculative account. It's less than 10%, maybe is more than 10% now because I've made some, but it's about 10% of my entire portfolio. My entire investment portfolio is the Robinhood account is 10% of that, which is my complete speculative transactions. Now, even though I speculate, I still hold true to some of my principles, which is just investing in good companies. So the majority of my holdings in my Robinhood account is Tesla. It's about 70% of my Robinhood account. And so right now it's not doing well because, again, it's being affected by the entire market. Without further ado, here you go, my Robinhood account, nice and red for you guys. So as you can see, I'm down 41 or so percent, and it's about a little bit over $16,000 down. Ouch. Now that stings, of course, but I'm used to this. I've had the ups and downs of my entire portfolio. Again, I've been doing this for 15 years, so I'm used to seeing this type of stuff. The majority of this is driven by my Tesla stock, of course, because I'm heavily invested in Tesla in my Robinhood account. But it's exciting because I'm just going to buy in the dip. And so another thing to consider is that I started this account with $15,000, so I'm still technically up overall about $7,000. But it'd be nice to get that up. The high that I've been is around $42,000. So I can't wait to do another video where I show you it go back up past $42,000. My expectations for this Robinhood account is to hit 100,000 by the end of the year. So I'll just continue to make these updates just to show you the ups and downs, the ebb and flows of the stock market and the picks that I have. Now, what should you do during these dips? Well, definitely hold. Do not sell, because you technically don't lose anything until you sell, until you realize the loss. Conversely, you don't make anything until you realize the gain. So just hold. If anything, the best thing to do now, of course, you probably know this, is buy the dip. Buy the dip. That's why it's important to have cash on hand. I typically have about 2 to 3% of my net worth, not my portfolio, but my net worth in cash, so I could take advantage of these dips and buy in and take advantage of the dips. One other thing that you can do, which unless you've been doing this for a while, I don't recommend, but what you can do is trade off your lower performing or your less conviction stocks, the ones that you aren't really so fond of, and you haven't really you won't lose that much if you sell. Like for example, one of the ones that I'm thinking about selling is Moderna. I've done really well, so overall I've made a gain on my position in Moderna, but they're not like I will choose Tesla over Moderna. So I'm considering selling my position, which is about $5,000 or $6,000 in Moderna, and sell and buy more Tesla, because right now it's on sale. But that's if you are playing with decent numbers. Other than that, just hold, buy the dip, and just enjoy the ride. This is part of the journey. This is part of the market. It's gonna have these ups and downs. So don't freak out. Be patient. Don't be looking at your phone every single hour. That's something I need to work on. But just be patient. Wait for it to come up. I mean, just don't do anything. Don't sell. Don't panic sell. And just hold the line. Diamond hands. Just chill for now. You know, some people call it's a cooling. The market has to cool down right now. So just chill. Take a chill pill. Watch some Netflix. I have some investments in Netflix, so definitely watch Netflix. Well, that's it, guys. If you're new to this channel, please consider subscribing. It would mean a lot to me. And if you haven't liked the video, please like the video. It really helps me out. That's all for today. Just something short, sweet, to the point. We'll see you in the next one. See ya.